Welcome to Industry Focus, a show that dives into a different sector of the stock market every day. I'm your host, Shannon Jones. Today is Wednesday, January the 16th. We're talking healthcare. I'm joined in the studio via Skype by healthcare guru Todd Campbell. Todd, how are you?
Hi, how are you today? It's great to be back, and it's going to be a packed, fun show today. We cover some topics that we haven't talked about in a little bit. And I think our listeners are going to love it.
Yes. Super excited for today's show. So we're going to be actually covering some of the bigger news stories surrounding the marijuana industry. Todd, it's been, I guess, a couple of months since we've really gone through kind of the top stories and what's happening in the industry. And there's been a lot going on over these past couple of months.
What's really fascinating, I mean, you might think that given share prices of most marijuana companies, fell dramatically after the Canadian recreational market opened in mid-October, the buy the rumor, sell the news, proving itself out yet again. And people might think, oh, well, these stocks have just been horrible and nothing good is happening. But, underneath the surface, it's business as usual. And we've got companies that are reporting big deals, and they could have, billion-dollar impacts down the road.
Absolutely. And for investors that may be hurting, those that wanted to be, I guess, the first movers into this industry, certainly with the marijuana industry, it is still a very young industry that is budding, excuse the pun there, but it's growing. And so there's going to be growing pains. But just like you said, Todd, it is business as usual. So talking about deals, let's start off with really the more recent news. And it was actually big news coming from the largest marijuana producer by market cap, which is Canopy Growth. And that's ticker symbol CGC for our listeners. And it now appears to have a pathway to the United States. And that's really thanks to some crucial pieces of legislation that came on both the federal and state levels, Todd. I took a look this morning. Right now, Canopy sitting on a hefty $14 billion market cap, shares priced at right about $41 a share. And year to date, shares are up about 54% versus the S&P up about 4.3%. So Todd, lots of good news happening for Canopy Growth. Is it true? Is Canopy Growth coming to America?
Yeah, and we're not talking about the 80s Eddie Murphy movie for anybody who's been around the block.
And potentially a reboot coming to America, which I'm super excited about. One of my favorite movies. But I apologize. I digress.
Yes. So, the big news here is that Canopy Growth has long said, listen, we're not going to go do business in the U.S., and that's because it's, marijuana is still, cannabis, still illegal federally. And listing rules on stock exchange, Toronto and New York, say that if something's illegal federally, if there's a business illegal federally, you can't participate in it and still be on the exchange. So they have long stated, hey, we're not going to do business in the U.S. until we find a legal pathway so that we don't run afoul of federal laws. They got their path. They got their path in December, Shannon, when the U.S. passed the latest farm bill. And that farm bill included some really important language tied to the legalization of hemp, which, as people may or may not know, is a low THC strain of cannabis sativa. So it's a strain of the same plant that marijuana comes from that does not have the same level of psychoactive activity, I guess, that cannabinoid THC that normal traditional marijuana has. And, Shannon, I'm sure you're going to dive into this a little bit more, but the Farming Act and the changes that were in the Farming Act really just opens the door up now for companies to come in and start developing cannabis-based products that up until now couldn't have happened.
Absolutely. And so talking about the Farm Bill a little bit more, and so this was the 2018 Farm Bill signed into legislation in December, specifically doesn't change marijuana in terms of it on a legal level. But what it does do is remove hemp. And as you so well explained, hemp, very different than marijuana. There are actually a lot of differences. I think the main one that you mentioned, of course, being the levels of THC. So for hemp, you're looking at THC levels below 0.3%. Marijuana, THC levels can be anywhere from like 15 up to 40% in terms of concentration level. So you're talking about a product that has lower levels of the psychoactive ingredient that many people think of the high that comes with marijuana. So that now has been removed from it's no longer scheduled, it's no longer a controlled substance in the United States, opens the door wide open for all of these practical applications. And so hemp has actually become a much more intriguing industry for a lot of investors apart from marijuana because of all the practical applications. We're talking about, of course, the oils, clothing. Think about athletic wear. You already have some companies that have hemp in place of cotton into their clothing. You're talking about building materials, food products, skin creams. The list goes on and on. So this has really opened up the door a whole lot in terms of practical applications. And also, too, it's interesting because hemp, compared to marijuana in the court of public perception, is, I think, much easier to be digested overall because it's not marijuana. It's not lighting up a joint. So when you talk about oils and creams and even vapes, in the court of public perception, people are much more willing to use these products than marijuana itself. So I think this farm bill in and of itself has really opened the door wide open here in the United States.
Right. By making it an agricultural commodity now, you have farmers that will now be able to take advantage of all sorts of supports that are in place from the USDA to be able to, dedicate more of their land back to growing hemp. And, that's just, you could see an explosion of hemp farming over the course of the next couple of years because of this change. And it's a change that a lot of people have been lobbying for a long time. According to the Congressional Research Service, I believe that the U.S. was the only developed nation that still listed hemp as a not as a crop, but as a controlled substance like this. So, finally getting on board with many other countries, including Canada, when it comes to hemp, and opening the door now again for a path for Canopy Growth to come into the United States, start developing products that contain the other cannabinoids, the chemical cannabinoids that are in hemp, specifically cannabidiol or CBD, which is known to have more medicinal properties. That's what's actually, CBD is what's behind the drug Epidiolex, which we've talked about in the show in the past, which is that drug that's won approval from the FDA for use in epilepsy patients. So a lot of excitement around the potential to create products containing CBD, whether it be beverages or edibles or vapes or whatever. So as part of this, just backing up a second to what's going on here with Canopy Growth, after that announcement, Canopy Growth said, hey, we think that this provides us with a path we need. And then, sure enough, now we find out that they have inked a deal where they've received a license to process hemp in New York State, and they plan on investing $100 to $150 million into this industrial park that will be filled with hemp-based companies. It's kind of like a hub of hemp innovation, if you will, Shannon.
Yes, very similar to, I guess, where I got my start in healthcare, Research Triangle Park in North Carolina, where a lot of smaller biotechs are now housed. It'll be just like that, but for hemp in New York. And just like you mentioned, Todd, it does open up the door for U.S. farmers. And not only Canopy Growth, but many of the other large producers, too, you'll see also benefiting from this as well. So on both the federal and state level, good news there. I think with all that's happening with Canopy, we'll have to wait and see, even on the industry level, will other states follow suit when it comes to Canopy producing these products, these CBD-based products and hemp-based products? Can they distribute across state lines? I think these will be a lot of questions to watch moving forward, but certainly is a positive on the side of Canopy Growth right now.
Well, the other thing to consider here, too, and this is something that investors may not have really thought about, is, there are CBD products on the market today, but they're sold as nutritional supplements. There's no real controls, if you will, over, and as a result, there's a lot of variability in the CBD, amount of CBD that they claim is in a package and what when testing's done, how much CBD is actually in there. So, clearing this pathway through the USDA is going to open up all sorts of doors for companies to really get serious about making sure that developing products and using processes and practices that will allow them to consistently produce a product. So when you pick it up 1 week, it's going to have the same exact flavor, taste, content of CBD or whatever cannabinoid is in it as next week or the week before. And I think that that's really, really important, can really drive demand. Like you said, a lot of it's going to come down to how the government or how regulators treat these goods. Will they just be limited for sale in New York? Will you be able to sell them across state lines? My assumption will be that they'll be able to sell it across state lines. That would be great news for Canopy Growth because, Shannon, right, 38% of Canopy Growth is owned by Constellation Brands. Constellation Brands is one of the largest beer, wine, and spirits makers in the country. Their headquarters is in New York already. They've got plenty of branding experience, distribution experience, research experience, all the things that would be necessary, if you will, to take products that are made in New York and distribute them throughout the country. Now, in New York alone, I was speaking with Matt Carnes at Greenwave Advisors the other day. He thinks that the medical and recreational New York market for marijuana and marijuana products could be about $2.7 billion in 5 years. That's still incredibly significant when you consider that last year, Canada's recreational and medical sales only totaled about $1.6 billion. So that state alone could generate out more total market opportunity than Canada did in 2018.
Yeah, very good point there. And I believe they're announcing a location for this new hemp industrial park, I believe in the next 100 days. So I'm sure a lot of eyes will be on that. And I'm sure you'll hear more announcements moving forward, too, from other marijuana companies. Let's shift gears and talk about the second company making headlines. And that second company was none other than Aurora Cannabis. That's ticker symbol ACB. They released their preliminary Q2 guidance last week. And Todd, with that guidance, we're finally getting a sneak peek to see what exactly is happening on the sales side post this Canadian legalization.
Right. So this is their fiscal second quarter numbers, but it would be the calendar fourth quarter results. As we already said, Canada's recreational market opened in the middle of October. So you've got a pretty good period of time now to get a feel for how that market may move the needle for these various companies. And Aurora Cannabis is particularly important to watch because alongside Canopy Growth, they're arguably neck and neck, right, Shannon, for the biggest producer in terms of production capacity and in terms of sales. And the results, and I'm sure you're going to talk about this in a second, may have fallen shy of some people's expectations. They were still pretty impressive nonetheless. According to management, sales clocked in at between $50 million and $55 million. So at least a $200 million run rate for Aurora Cannabis last quarter. And for perspective, that's up 327% year over year.
And that is impressive. But still, Todd, not everyone was quite pleased with that. And you alluded to it, but there were some analysts that were actually hoping to see sales much higher than that. They were really guiding, or at least looking for at least about 67 million in Canadian dollars in terms of sales. And of course, they fell a little bit short of that. But as you and I talked about before the show, there are so many factors that go into this. The first of which is the fact that, number one, the marijuana marijuana industry is so new. I think it's hard for analysts to really get a good benchmark in terms of what should sales be. I mean, we're only looking at a couple of months worth of sales coming out of the Canadian legalization. So, I mean, it's hard to set a benchmark, and it's even harder to set a benchmark for a company that is, or an industry that is so new. Also, too, Todd, I mean, there's supply issues going on top of that, not necessarily the fault of Aurora, but with any new industry, you're going to have logistics and distribution issues, too.
We had so much demand in the first weeks when the recreational market opened up in Canada that, you know, a lot of products were out of stock. It was taking people weeks to get the products that they were ordering online. And if they went to the shelves, there weren't many choices there. So I think that you hit the nail on the head. You got to remember, people, that, you know, when we think about consensus estimates about big U.S. companies, you know, those are usually, they can be based on, you know, 10, 15, 20 different analysts. The marijuana market is so young and so emerging. There are not a lot of, you know, of the big institutional analysts covering this industry yet. And it's going to improve as time goes on. They'll get better at building their models, and those consensus numbers will get more useful. But for now, I think that they're not quite as useful. I wouldn't put as much weight on them as I would, say, the consensus earnings estimates for a company like Altria, right? I think the thing to watch more for investors is, you know, obviously the sales and growth run rates, what that means translates into for operating margin, which we don't know yet. That wasn't released in the preliminary figures that were outlined, and what that could mean for eventual profitability. The other thing I would keep an eye on is how quickly companies like Aurora Cannabis are growing their production to meet all the demand that is emerging, not only in Canada, but also in other markets like Germany. They did provide us with a little bit of insight into that. Production capacity in November was 70,000 kilograms per year. That was the run rate. Now it's about 100,000 kilograms per year. And their expectation is that they'll reach a run rate of 150,000 kilograms, which is more than a doubling from November, by the end of their first calendar quarter, so the third quarter of 2019. So rapid demand, the rapid production there could provide the fuel that's necessary, if you will, for even greater sales as we go forward. And I would expect that we're going to see that. I don't think that, you know, 200 million run rate probably undersells what we'll be talking about in 6 months.
Yeah, and you talked about them beefing up their production capacity, and we really won't see them hit peak capacity for at least another year and a half. So there's still some ways to go. You also talked about margins. Aurora is also developing a series of products, like many of the others, that are just higher margin products beyond just marijuana itself. So you're talking about, of course, the CBD oils, the vapes, a number of different things that they're actually investing in. So I think you'll see both the top line and you'll see some margin expansion as well. But that wasn't the only thing that Aurora announced. They also announced an acquisition of a specialty marijuana brand named Whistler. Todd, what can you tell us about that deal?
Whistler was one of the first 10, I believe, to get granted license by Health Canada. It's a niche player, but they make premium cannabinoid type products, marijuana products. They have indoor facilities, which are typically more expensive, but you have greater control over your ability to produce a premium type product. Their average prices are significantly higher than the average prices of the marijuana that you would typically find, say, you know, on any shelf in Canada or inside of a dispensary. So this is a important move as far as trying to differentiate their product lineup. So they maybe have products like a lot of consumer goods companies. They'll have products that are at the entry level point. They'll have products that are for the average person, and then they'll have these high end premium products that will most likely command or offer better margins. And I think one of the things that's interesting is that if you talked or alluded to how important developing value-added consumer goods could be to the profitability of these companies, because, dried bud is like a commodity. I mean, it's going to, as we produce more and more and more, there's less of an opportunity for them to command really high prices. You could see price pressure like we saw in Colorado and Washington and some of these other states where marijuana is legal in the United States. That won't really be as big of a deal for these value-added products, because if anything, it'll help their margins because they'll have lower input costs, especially if they're having to, buying some supply from other growers. That will change a little bit with Whistler, because Whistler has these high-end strains. Okay, it can command a higher price than, say, traditional dried bud would be inside one of these stores.
Absolutely. And they are actually really highlighting the fact that Whistler is the first organic certified company. So really going after that market that I think we can all safely say is kind of the Whole Foods consumer of today. But so Whistler does represent a really interesting opportunity. I think it was a $175 million deal. So it wasn't, typically one of those billion-dollar blockbuster deals that we're looking at here. I think it was a very smart move to everything that you said, Todd. It really helps them start to differentiate, because that will be key to pricing power moving forward. With all of these marijuana players now here, more to come. So I think that'll be a key area to watch. I also think, too, moving forward with Aurora, just to level set, we will actually get their Q2 earnings. I believe that comes out on February the 11th. So we'll actually see exactly what they did and be able to dive into that a little bit further. But I think one of the key takeaways, Todd, is overall, this is still a new industry. You'll have to give it some time to allow the industry to mature. It's going to have growing pains. And for investors out there that are sitting on stocks that maybe aren't doing that well, be sure to certainly keep up with the news, see what they're doing to differentiate their product lines, take a look at their margins, compare them to their peers, and really identify and see if you're holding on to one that likely won't be around much longer because it really will become just another commodity, like you mentioned, Todd, or one that will truly have a product line that will really drive top and bottom line growth for the long term.
Wise words.
Our last major headline is actually going to take us back again to December, but one I wanted to make sure that we covered, Todd. And we got news of the second largest marijuana deal. This was behind, of course, the Canopy Constellations deal that we heard about in 2018. But that was a deal between Altria, its ticker symbol MO, and the Cronos Group, ticker symbol CRON. Altria, it's a tobacco giant, parent company of Philip Morris, announced it would invest $1.8 billion into Cronos in exchange for a 45% stake in the Cronos Group, which has a portfolio of various marijuana investments and some joint ventures, including some smaller growers too. Todd, what else is Altria getting in this deal?
This is a massive deal. And this is something that a lot of people were wondering and have been wondering for the better part of a year. What other companies, specifically tobacco companies, might be interested in diversifying the portfolio away from tobacco and embracing the movement towards marijuana. And Altria had been rumored for a while to be kicking tires as alongside some of the other major alcohol companies and beverage companies, and Coca-Cola was even mentioned. Altria was the one that made the big splash, though, with this deal. They get the 45%, as you mentioned, of Cronos Group. They hand them, Cronos Group, $1.8 billion, which is huge. That's massive financial flexibility that Cronos can use now to elevate itself into the leadership of this emerging industry. Altria also got a warrant that will allow it to buy an additional 10%, bringing its ownership to 55%. They can do that within 4 years at a price of about 19 Canadian per Cronos Group share. So right now, at 45%, we could go to 55%. Cronos board of directors has expanded from 5 to 7 directors, and Altria will get to nominate 4 of them. So the majority of the members of the board will now be those who have been nominated by Altria. That's also useful too to know as well. This is also a very important deal because it came only about a week before Altria announced another huge deal, and that was its $12.8 billion investment in the e-cig player Juul. They got 35% of Juul in that deal. And if those who aren't familiar with Juul, Juul has about 30% of the e-vapor market. Now, it doesn't take a rocket scientist, right, Shannon, to see where Altria may be going with this. They may be looking at this and saying, okay, if the barriers to entry federally are falling in the United States, why wouldn't we want to have a company like Cronos that's on the cutting edge of being able to figure out how to extract not only CBD and THC, but the other 100 cannabinoids that are found in marijuana, to be able to include them in vapes that could be sold throughout the United States using our massive distribution, marketing, brand experience. I think that's maybe the end game. We're still, again, far away from that in terms of marijuana itself, but it wouldn't shock me if Cronos was one of the next companies to join Canopy Growth and say that they're going to use the Farm Bill passage in December to enter the U.S. market to start creating hemp-derived CBD products. Whether or not those end up in Juul someday, we'll have to wait and see.
Totally agree on all fronts, Todd. This is such an interesting deal. I think strategically, you really see the benefit to both companies in making this deal. I think what I like from Altria's perspective is really the optionality. I mean, this is a risky industry to dive into. Obviously, it finally gets Altria a foot in the game in the marijuana space, but with this 45% stake, which gives them the option to up that to 55% over the next 4 years, I love the fact that they're going to give the market and the industry some time to mature. I also love the fact that Cronos Group is now also going to be the benefactor of really the regulatory compliance know-how that Altria brings to the table. And that couldn't be more important, especially as they start to dive into U.S. markets. Altria is known as the leader in tobacco when it comes to the U.S. markets. They're getting that. In addition, they're also getting the manufacturing expertise, scale, production, all of these things, which I think are key to the underlying thesis with Cronos Group. Now they've got, I think, what is a match made in heaven. You mentioned Juul. I talk about the regulatory know-how of Altria, but I just have to say, with Juul, some investors have probably been watching the news. It's got its own fair share of regulatory scrutiny from the FDA, thanks to their vapes, which apparently or allegedly has been said has been targeted toward teens with their fruity, like mango flavors in these vapes. So that'll be interesting to watch to see how they navigate that. But certainly is not the first time they've dealt with regulatory issues at Altria. So I like the expertise and the experience that they're bringing to the table.
Yeah, they've been there, done that, no question. If you look at Juul, they make the ones that look like a pod. So it looks like a USB stick that you'd stick into your computer or whatever. So they look less like traditional cigarettes. Altria had actually made a decision to stop selling its own pod vapes prior to the entering the Juul arrangement or agreement, as kind of a nod to the FDA and saying, okay, we recognize that maybe these pods are much more attractive to younger people to smoke than say something that looks like they're smoking a regular cigarette. So we'll stop manufacturing those. So the FDA has since come out after this deal was announced and said, shame on you, essentially, for now going out and buying such a big stake in Juul, and kind of, raising again those question marks. But yeah, this is not new territory for Altria, and I think that they'll be able to navigate this, and if they do navigate it well, there's obviously a tremendous amount of synergies. The other thing that we didn't mention, Shannon, is that it's kind of a backdoor way for Cronos Group to potentially get relationships going with Anheuser-Busch.
Yeah, so they've got, I believe it's a 10% stake in Anheuser-Busch. So this certainly gives Anheuser-Busch the opportunity to make a move into the cannabis-infused beverage area as well. So that'll be a really, really interesting play. And I'm sure all investor eyeballs are on that right now, Todd.
Absolutely. This is going to be so much to watch. This is going to be a fast-growing market in 2019. And investors are going to want to be paying attention.
Wise, wise words. And we will certainly keep you updated on all the latest. But in terms of industry focus, that is it for this week's show. Thank you so much for tuning in. As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against, so don't buy or sell stocks based solely on what you hear. This show is produced by Austin Morgan. For Todd Campbell, I'm Shannon Jones. Thanks for listening, and Fool on.